My greetings to everyone. I am Professor Namita Rajput, Professor in Department of Commerce, Aurobindo College, University of Delhi. In the ongoing series of Principles of Marketing, today we will be discussing on the distribution strategies. The intensive distribution strategy involves placing a product in as many outlets as possible to maximize its availability and accessibility to the consumers. Now, basically, when you talk about the selective distribution, which is another strategy, which involves using a limited number of outlets in a geographical area to sell the products, and this strategy is typically employed for the products that require a certain level of consumers or the expertise like electronics, high-end cosmetics and the furniture. Now, the next is your exclusive distribution, which involves granting an exclusive rights to a limited number of retailers or the distributors to sell a product in a specific geographical area. Now, this strategy is commonly used for the luxury and the high-end products as well as specialized industrial equipment. Another example of another strategy is a direct distribution, in which the direct distribution of the selling of the products is there without having any kind of a use of a middleman or an intermediary. Now, this strategy can include an online sales, company-owned retail stores and direct sales representatives. So, the company uses direct distribution to establish a very close relationship with the consumers, control the entire customer experience and capture a large portion of the profit margin. Now, let's take an example. A generic consumer electronics company may utilize a direct distribution through its website, now allowing the customers to purchase the products directly from the company to receive them through home delivery, etc. By bypassing the intermediaries, the company can offer a seamless purchasing experience, gather the valuable customer data for the future marketing efforts. Now, another major distribution strategy is your franchising. Franchising involves granting the rights to sell a company's products or the services and use its business model to independent business owners. This distribution strategy, it allows the companies to expand rapidly while maintaining a consistent brand image and the customer experience across the various locations. Let's take an example. A generic fast food restaurant brand may use a franchising distribution strategy, enabling an entrepreneur to operate their own restaurants under the brand established guidelines and the standards. By leveraging the resources and entrepreneurial spirit of the franchisors, the company can advise and achieve a widespread marketing penetration and the brand recognition while minimizing the direct operational cost. So, by employing these distribution strategies, the companies can effectively reach their target markets, meet the customer demand and maximize their sales and the market penetration while maintaining a control over their brand image and the customer experience. The choice of distribution channel is a critical decision for the business as it directly impacts the reach, accessibility and effectiveness of getting the products or the services into the hands of customers. Now, let's do the factors affecting a choice of channel of distribution. Now, there are several factors which influence the selection of distribution channel, encompassing the market dynamics, product characteristics, company resources and capabilities, as well as a channel related considerations. Now, by carefully evaluating these factors, the business can actually strategically align their distribution strategies with the market demand, customer preferences and the organizational goals, ultimately optimizing their distribution network to achieve the competitive advantage and the customer satisfaction. Now, the next is your market size and geographic dispersion. The size and geographic dispersion of the target market influence the choice of distribution channels. A large market with a dispersed customer may require a more extensive and efficient distribution network to ensure the widespread product availability and accessibility. Understanding the customer preferences, shopping habits, buying behavior is very crucial for determining the most effective distribution channels. For example, if the customer prefer to shop online or require a personalized service, the company needs to align their distribution strategies to accommodate these preferences. The competitive environment and the strategies the competitors can impact the channel selection. Analyzing how the competitor reach the customers and deliver their products can actually help the companies identify the opportunities for differentiation and competitive advantage in the market. Next is your product related factors, the product complexity and the technical support. The complexity and the technical requirement of a product can also influence the choice of distribution channels. The products that require a technical support, installation or after sales services may necessitate a direct distribution model to ensure a proper customer assistance. Now, the perishable products require the fast and efficient distribution to minimize the spoilage and maintain the product quality. The companies selling the perishable goods may need to choose a distribution channel that ensures a rapid delivery and the minimal handling to preserve the freshness. Now, let's take an example of a product value and the margins. The value and the profit margins associated with the product can actually impact the channel selection. The high value products may justify a more direct distribution approach to maintain and control overpricing and the customer interaction, while lower margin products may be more suitable for indirect distribution through its intermediaries. The financial resources and infrastructure. These are company related factors. The financial resources and infrastructure of the company, they play a vital role in distribution of the selection of the channels. The companies with the limited resources may opt for the indirect distribution through intermediaries, while a larger company may invest in building their own distribution network. Now, the brand image and control is another factor. The companies striving to maintain and strict the control over their brand image and the customer experience may learn directly the distribution channels, enabling them to oversee every aspect of the product delivery and the customer, actually the interaction. The factors affecting choice of channel of distribution. The next we discuss is the expertise and the personnel. The expertise and the capabilities of the company's personnel can also influence a channel selection. The companies with a skilled sales force and the customer service team may opt for the direct sales channel, while those lacking in the house expertise may rely on the third-party distributors. Now, the channel accessibility and reach is another channel-related factor. The ability of the distribution channel to reach the target customers and provide the accessibility to the product is very critical factor. The companies must access and assess the coverage and accessibility of the different channels to ensure that the products reach the intended market segments. Now, the channel partner capabilities and alignment. Evaluating the capability and alignment of the potential channel partner is also very essential. The companies need to partner with distributors, retailers who are capable of effectively representing their products and are aligned with the company's strategic objectives and the values. Channel flexibility and adaptability. The flexibility and adaptability of distribution channels to accommodate changes in the market demand, product offerings and the customer preferences are very important considerations. The companies should choose the channel and can evolve and adapt to the market dynamics. Now, by carefully considering these factors, market, product and company related, and of course the channel in, the competitive landscape and the market structure impact the channel choice. Intense competition may necessitate a strong widespread distribution network to effectively reach the customers and gain the competitive edge. Now, additionally, the presence of the dominant competitors and their chosen distribution channels can also influence a company's decisions regarding its own distribution strategy. Product perishability and sensitivity, which is a product-related factor. The perishability and sensitivity of a product influence the choice of distribution channels. Perishable or fragile products may require a faster and more direct distribution channel to minimize the risk of the spoilage and other things. So, product complexity and customization is another factor. Highly complex or perishable and hands-on sales and distribution approaches, such as direct sales or specialized network of the distribution with an expertise in the product features and applications. The value and price of a product can impact the choice of distribution channels. Higher value premium products may benefit from exclusive or selective distribution channel to maintain a brand positioning and the perceived value. The financial resources and capability is another factor which is very significant in determining the distribution channel. The company with the limited resources may opt for a very simpler channel, the cost-effective distribution channels, while a larger firm may invest in more sophisticated and diverse distribution network. Marketing and sales expertise is another factor. The company's marketing and sales capability influence the choice of distribution channel. The companies with strong in-house sales and marketing team may prefer a direct distribution channel, while those lacking such expertise may rely on intermediaries with specialized knowledge and experience. Now, another factor is companies' objectives and strategies. The overall objectives and strategies of the companies, such as market penetration, brand building, customer reach, guide the selection of distribution channel. For example, a company focused on the rapid market penetration may prioritize extensive distribution coverage to quickly capture the market share. The accessibility and coverage provided by the different distribution channel of the distribution of the channels, the companies may select the channels that offer the best geographical coverage and accessibility to the target customers. The level of control and the management a company seeks over its distribution activities, they also influence the channel choices. The companies desiring a greater control may opt for direct distribution, while those seeking to leverage the expertise of intermediaries may choose an indirect channel. The flexibility and adaptability of distribution channels to accommodate the changing market conditions, the product requirements, and the customer needs are very important considerations. The flexible channel can better respond to evolving market dynamics and the product demands. Now, these factors, they collectively shape a company's decision-making process when selecting the most suitable distribution channels for its products or services. Depending on the specific circumstances, strategic objectives, companies may prioritize different factors to create and optimize the distribution network. Distribution channel refers to the path and the products and services they take from the production to consumption. Now, it is very crucial aspect of the marketing responsible for delivering the goods to the end consumers or the end user. Middlemen, also known as intermediaries, are key players in the distribution channel. They link the producer of the goods with the end consumer, providing various services to ensure the smooth flow of products through its channel. Now, introduction to the channel of distribution and the types of the middlemen. Let's do this middlemen aspects. Now, the type of middlemen in the distribution channels are wholesalers, retailers, etc. So, we'll explain it one by one. Let's first discuss about who the wholesalers are. Wholesalers purchase the goods in large quantities from the manufacturer and sell them in a smaller quantities to the retailers. They serve as an intermediaries between the manufacturer and the retailers, adding value through bulk purchase, storage, and delivery. The next is your retailer. The retailer purchases the goods from the wholesalers or directly from the manufacturers and sell them to the end consumer. Now, they are the final link in the distribution chain and interact directly with the consumers, providing a range of the products or the services. Next is your agent. Agent acts as intermediaries who facilitate the sales and the purchase of the goods on behalf of either the buyer or the seller. They do not take the ownership of the goods but play a very critical role in negotiating and finalizing the transactions. The next is your broker. The brokers are very similar to the agents but focus on facilitating transactions between the buyers and the sellers in exchange for a commission. They typically specialize in specific markets or the product categories. Next is your dealers. Dealers are the business entities that engage in the distribution and sale of the goods with a very specific markets or industries. They may represent one or the multiple manufacturers or the product lines. Next we talk about is the distributor. Distributors, they operate similarly to wholesalers and handle the movement of the goods from the manufacturers to the retailers. They often hold exclusive rights to distribute specific products within the designated regions. Next we have is the jobber. Jobbers are the individuals or the entities engaged in the wholesale purchase and resale of the goods, often focusing on the specific industries or the merchandise categories. Next is your branches. Manufacturers may establish the branch offices or the outlets to directly promote and sell their products in the various regions. Now, these branches serve as an extension of the parent company's operations. Next is your consumer cooperatives. Now, these are the member-owned organizations that purchase and distribute goods to their members, often focusing on providing a high-quality products at the competitive prices. The company showrooms. Some manufacturers maintain their own showrooms or the retail outlets to showcase and sell their products directly to consumers, bypassing traditional retail channels. Next is your facilitating agencies. The transport organizations, warehouses, banks, insurance companies are the examples of facilitating agencies that play a very critical role in supporting the movement and storage of the goods within the distribution channel. Each type of middleman, what we have discussed in the distribution channel, they provide the unique value in facilitating the exchange of goods and services, contributing to the efficiency and effectiveness of the overall distribution process. So, let's do them in detail. Wholesalers play a very crucial role in the distribution channel by serving as a vital link between the manufacturer or the producer and the retailers. They specialize in purchasing the goods in the large quantities from the manufacturers and then selling those goods in the smaller quantities to the retailers. Now, this intermediary function is very essential in ensuring a smooth flow of the products through the distribution channel from the point of production to the point of the sale and the end consumer. Now, let's do the characteristics of the wholesalers, like they do a bulk purchasing, warehousing and inventory management, distribution and logistics, and of course, they have to keep a product variety and assortment. The wholesalers offers a wide range of the products to the retailers, catering to the diverse needs and the preferences of the different retail outlets. Now, this variety allows the retailers to source a comprehensive range of the products from a single wholesaler. Next is your credit facility. Wholesalers may extend the credit facilities to the retailers, providing them with a favorable payment terms that support their cash flow, purchasing capabilities, and this financial support is very essential for the retailers to manage their working capital effectively. They also have to keep the market information and all the insights. So, let's do what the functions of the wholesalers they do. They do the buying and assembly. The wholesalers purchase the goods from the manufacturers, assemble a diverse inventory, often specializing in a particular product categories or the industries. They do a very vital function of warehousing and inventory management. They store the products in the warehouses and manage the inventory to ensure the availability of the goods and the retailers. Transportation and delivery is another function what the wholesalers do. Wholesalers arrange for the transportation of the goods from the manufacturer to their warehouses and subsequently to the retailer. So, the efficient logistics and the delivery services are very crucial to ensure a timely product availability for the retailers. The next is your financing and the credit facilities. Providing credit facilities to the retailers, they often support their purchasing capabilities and contribute to the smooth functioning of the distribution channel. They have to keep the market information and do the analytics part also, and they have to manage the risk also which is associated with the distribution process like holding of the inventory, product storage, transportation risk, etc. Now, wholesalers are very important because they help in the market reach, helps in the economies to scale, does a best inventory management and availability of the goods, followed by the credit facilities and the support facilities what they do, including the market insights and the analysis. So, we can say that the wholesalers are indispensable intermediaries in the distribution channel, providing a wide range of services to the manufacturer and the retailers. They facilitate the efficient movement of the goods, contribute to the expansion of the market reach, and play a very vital role as far as the availability and accessibility of the goods is concerned. Next we talk about is a retailer, which is fundamental component of a supply chain. They also give the extended services like they are having a customer interaction directly, which helps in unique experiencing and understanding the consumer behavior. Assortment and merchandising, they curate an assortment of the goods to meet the varied needs of the customer. They help in the price setting, and the retailers have the autonomy to set the prices at a point that covers their cost and includes a profit margin also. Also about the location and accessibility, they are characterized by their efforts to be accessible to the consumers, whether through physical storehouses, storefronts, or in the convenient locations, or through an online platform with the efficient delivery systems. They also do a brand experience to the consumers, product availability, convenience to the customer, giving them customer services, enhancing their experience, giving them financing and the payment solutions, and also the local economic contributors. They contribute to the local economy by providing the employment opportunities and participating in the community activities. So they does a very good job as far as the sales and the distribution channel is concerned, marketing and brand extension is concerned, customer education and inventory management, risk distribution, expertise and personalization. They are the wonderful functions which are done by a retailer to the consumers. Now, as far as the expertise and the personalization is concerned, the retailers can offer a personalized service, expertise, and particularly in the specialty stores where the focus is on a very specific product category. Also, they do a wonderful job which is called as an after sales services support is concerned. They often handle the warranty claims, repairs, and providing the best experience, which is very challenging to the consumers. And also with the experience and engagement, they does a very good job for the consumers. The retail environment can offer a unique experience, providing the product demonstration, in-store events, trial samples, interactions, displays, and engaging the customers and enhancing their shopping experience. They also do a very good job as far as the trust and the reliability is concerned. Their established retailers can become trusted sources for the products with the consumer confident in the legitimacy and the quality of the goods they purchase. Thank you so much.